In this video, I'm introducing you to two powerful indicators that will revolutionize your trading and let you swing the market effortlessly. This approach is perfect for those of you with the 9-to-5 jobs who cannot monitor the charts full time. These two incredible indicators will let you place your trades and forget. This is because we shall be trading from zone to zone. This means you'll simply wake up in the morning, identify your first zone, then you place your entry, then place your take profit at the next zone. Guys, it's simple as that. That's why we refer to it as zone-to-zone trading. And they can work across all markets, including the forex market, stock market, crypto, and indices. If you are short on time but still want to make some extra income to supplement your day job, this strategy is the deal for you. I will show you how to set up these indicators, provide for you entry rules, and explain how to set up your stop loss and take profit levels. So let's dive onto the charts, but before we do so, don't forget to subscribe because it really helps out our team to continue producing free content for you guys. Fire up your trading platform and load our first indicator, which we call the Megatron. So this is how the Megatron indicator looks like. As you can see, it has different zones, but we shall be only focusing on the green and the red zones. The Megatron indicator is so powerful because it combines the fair value gap, support and resistance levels, supply and demand zones to only come up with one zone, which is so powerful. Well, now let's load our second indicator, which we call the stochastic oscillator. These are the settings of the stochastic oscillator. Make sure you copy them right. The oscillator will simply help us determine the oversold levels and overbought levels. Now, this is how our charts look like after loading both indicators. As you can see, the charts are very clean, very simple, and easy to understand. So now let's take a look at some illustrations such that we can appreciate this strategy. We shall begin with the buy trade. This is an H1 chart for Oxy Corporation. So since this is a zone-to-zone trading, we first determine our red zone, which will be our take profit target. As you can see, this is our red zone, which will act as our target. Now we wait for price to test our green zone for the first time, which happened right here. Then we wait for a second retest of that level. As you can see right here, price retested this level the second time. But it should be noted, during the second retest, the oscillator should be in an oversold area, which is below the 20 level. As you can see, it happened right here. Then we wait for a candlestick buy signal for confirmation, which happened right here. So this means all our conditions have been met. So we simply place our entry right here, then place our stop loss below the low, then we place our take profit at the red zone. As you can see, the trade worked out well. Guys, this strategy is so simple and easy to understand. This means you will simply wake up in the morning, get both of your zones, determine your trend, place your entry and place your target, and wait to cash in big at the end of the day. Now let's take a look at the second illustration. This is an H1 chart for Mavotech. So first things first, we identify both of our zones, the red and the green zones. Since this is a buy trade, we wait for prices to test the green zone twice, which happened right here and right here. It should be noted, during the second retest, the oscillator should be in an oversold area, which is below the 20 level, and this happened right here. So guys, meaning all our conditions have been met. So we simply place our entry right here, now stop loss below the zone, then we place our take profit at the red zone. As you can see, prices are progressing steadily to reach our red zone. As you can see, this trade is still in progress, so it's a matter of time for prices to reach our target, which is our red zone. Now let's flip onto the next chart and look at some sell illustrations. This is an H1 chart for 10 Risk Corporation. As you can observe, prices have been in a downtrend. So the next step is to determine our two levels, which is the red level and the green level. Since we are buying, we shall wait for prices to test the red zone twice, which happened right here. As you can see, the red zone was retested twice. Now it should be noted, during the second retest, the oscillator must be in an oversold area, which is above the 80 level on the stochastic oscillator. When that happens, it means all our conditions have been met. So we simply place our entry right here, our stop loss above the red zone, then we target the green zone. As you can see, prices simply crashed into our green level, hitting our take profit. Now let's take a look at one last example. This is an H1 chart for Home Depot Corporation. Our first condition is to determine both of our zones. This is our red zone and this is our green zone. Since we shall be selling, we wait for prices to test the red zone twice, which happened right here. And the stochastic oscillator should be above the 80 level, which simply means that price is overbought. So when that happens, we simply place our entry right here, then we place our stop loss above the zone, then we place our take profit at the green zone. As you can see, this trade is still in progress, but I can assure you it will hit our take profit. So guys, if you have a day job and you don't have time, this is a perfect strategy for you. Since you will be trading zone to zone, identify your zone, place your entry, set your take profit, set and forget. And this will allow you supplement your income, guys. Alright, I think that will be it. If you learned something, please subscribe because it helps out our team continue producing for you great content. As always, invest safe.